Rajat Jain, Chief Investment Officer at Principal Asset Management Company, joins us on the show right now. Rajat, hi, good morning. What is it that you're feeling about the market? Does it seem like at the top end it's looking a little fatigued and stretched now that we are just that close to the election outcome? And of course, in the near term, the market has been running up all of the month of March and April.
Yeah, you will see, I think, a lot of moves ups and down close to a big event like the election, at least in the near term. So in the near term, it's going to have a substantial volatility. But I think, if you just look at if you just step back a bit, look at the corporate earnings growth and the valuation. So markets are not cheap, but say about 19 and a half times FY20 earnings. And I think we should see earnings coming in FY20 and FY21 as well. So I think, yeah, in the near term you have a lot of volatility, but probably, we don't see a market, sharp correction, even if, I think market moves sideways in the near term with some volatility thrown in.
Rajat, hi there, good morning. Let's also get in a flavor of the, the small cap and Grow with Mighty Time, the new fund rather that you guys have. That's a small cap fund. Can you just throw a little bit more light on it and just tell us what exactly the triggers are?
Yeah, if you look at the small cap stocks as a category, we know, historically over the long term, they have outperformed the large caps and also the mid caps to some extent, with some volatility clearly. These stocks are much more volatile, but they do well if you hold them for 3, 4, 5 years sort of a time horizon. And what we are seeing now, in 2017, when the markets had rallied a bit, in 2018 and early 2019, these small caps and mid caps had corrected quite a bit. So we are finding a fair, one good thing about small caps is they come in all shapes and sizes. So now there's a standard definition of small caps that the AMFI has. And there are stocks from 250 first market cap downwards, so it's a very long list available to you. And we find there are enough stocks available which can see earnings growth of something like 15 to 20% CAGR over the next 3 to 4 years, and are available at reasonable valuations. So they give you reasonable good wealth creation opportunities, so which is why we think it's a good place and a good time to invest in small cap stocks. And they come in across all sectors, so right from IT to financials to metals to commodity stocks. So you have small caps available across sectors which you can invest in.
Okay. Just to understand a little bit more in detail about this particular fund, and it has a couple of unique facilities by which to protect investors from sharp market fall. And, if you could just talk to us a little bit more in detail about that, Rajat. I know you mentioned the fund itself and what it's all about, but just a little bit more for an investor.
Sure. Yeah, I think because, we are coming close to the event, which is the elections results. The fund closes on 6th of May. And, there could be uncertainty, volatility around the election results. So what we have, the facility or the step facility, that's the investor can invest in tranches. So for example, you can put, say, if you want to put 100 rupees, you can invest in up to 4 tranches depending on the, and the way that it's going to work is if the index, the small cap index goes down more than 3%, that is the stock has, when the market's correct in small caps, that money will be invested. So basically you can get an opportunity to invest at a lower level, and so you can do that across 4 months rather than putting it as a lump sum. So you can gain, and if you think that the market is going to be volatile around elections, it's going to help you. That is one thing that we have. And then we also have the trigger option, and so that it's important for investors to not only invest at the right time, but if they wish to take out their profits when they run up, so there's a facility available at which you can, using the auto trigger option, you can book your profits and then you can sweep those profits into any other fund of your choosing within the fund house. So it helps you invest in stages so that you don't have to come as a lump sum, you can come across the volatile time period, and B, you can take your profits and sweep them into another fund of your choice.
Rajat, what is it that you're making of this somewhat sectoral churn which is taking taking place in the markets? While financials, of course, have been the leaders, aside of that, there's been the Reliances of the world. But outside the gamut, even pain points like autos are now beginning to see newer names take leadership. We were just chatting with our chartists as to how both the auto index and within the auto index, names like Tata Motors and Bajaj Auto are showing signs of leadership. Do you sense that even in the beaten down spaces, there could be some pockets of strength, something that after being so thrashed out can be looked at, can be bought?
Yeah, I think the point you made last, that is because these stocks have just not performed for last 6 to 9 months. I mean, auto stocks have, and because of sort of reasons, actually the volume growth has been weak in these names, led partly because of higher cost in account of on two-wheelers, on account of newer safety norms or issue with NBFC, so funding became a bit of an issue. And even in FY20, that's the current financial year, you are seeing the rollout of BS6 come early FY21. So in this current year, we see in the period between the third quarter of this year and early next year, there should be a sort of a demand for autos. But the as of now, the auto sector remains under stress. But having said that, because the valuation gap is so extreme, I mean, you can find a good two-wheeler company potentially at say 13-14 times, just as an example, and whereas the market itself is trading at say 19 and a half times, and these companies are good companies, they're well-run companies. So I think there is obviously a rotation. People, they move out of some stocks or some sectors which have done very well and move into relatively beaten down sectors. So they may not perform in the near term, but the underlying story is good for the next couple of years, and then you can buy them at the reasonable valuations. So I think that is what's accounted for this sector rotation.
Rajat, wanted to get in your take on the big ET Now news break with respect to SoftBank looking at picking up Reliance Jio. We're talking about valuations in the tune of $2 to $3 billion. While you may not be able to specifically comment on this deal, give us a sense as to how you see the overall dynamics now shaping up. Even when you've spoken about telecom, you said that the dynamics overall seem to be improving. How are you reading into the latest developments here?
Absolutely. No, I think telecom clearly, I mean, we have seen this large consolidation, say 12, 13, 14 players. If you go back 4 years, has come down to 3 virtually. And so we are seeing a sort of flat ARPU numbers or marginal declining ARPU numbers. But ultimately, we know that they have to go up because Indian telecom data rates, particularly, are among the cheapest in the world, whereas the cost of spectrum and all of that is actually reasonably expensive here. So ultimately we see that these rates are going to go up, and because consolidation has happened. I mean, and in terms of demand side, we have seen that the explosion in demand from consumers, from the retail consumers, from enterprise as well. So yes, I think it's probably not a very near-term story, but next 2 to 3 years we should see telecom as a sector which should do reasonably well for investors.
We're running out of time this morning, but I do want to ask you, I've just been looking at some of these notes and just want to ask you, because you seem to not be anticipating any further softening of rates due to actually a positive uptick in the capex cycle. Just want to get your thought there before we let you go today.
Yeah, on the rates, I mean, we have seen 2 rate cuts this year. And inflation has begun to inch up, and we've seen food prices actually have begun to go up. Core inflation is already in about 5% range currently. So I think going forward, so the real rate of interest is something like, assuming inflation is about 4%, the real rate would be something like about 2% odd. So, and plus in the recent past, obviously oil prices have gone up. That's a recent phenomenon. But I think it's unlikely. I mean, we don't see a major, at the most, a 25 basis rate cut, but actually it's a possibility that we don't see any rate cuts for the rest of calendar 2019.
Okay, Rajat, great to have you on the show. Thank you so much for taking the time out and speaking with us.